Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from Super League Enterprise. It looks like they just sold a bunch of stock and warrants to raise money. Let's see if this is a genius move to level up or if they're just scrambling to stay afloat. Are they building a gaming empire or is this just game over? Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this with other investors. Okay, so first up, Super League Enterprise made a deal called a securities purchase agreement on May 30, 2025. Basically, they sold shares and something called pre-funded warrants to some investors. Think of warrants as options to buy stock later. They sold over 3 million shares of their common stock for just 0.12 each. That's super cheap. And they also sold warrants to buy almost 2.4 million more shares. In total, they raised about $670,000 before paying fees. That doesn't sound like a ton of money for a company. To help sell these shares, they hired a placement agent, Aegis Capital Corp. Placement agents are like investment banks that help companies find investors. Super League is paying Aegis Capital 8% of the money they raised. So out of that $670,000, about $53,600 goes straight to the placement agent. This whole offering was done under a previous registration statement they filed with the SEC back in December 2024. This just means they had permission from the government to sell these securities. There are a bunch of legal details in the purchase agreement and placement agent agreement, but the report says not to rely on them too much. Basically, these agreements are just for the companies involved, not necessarily for investors. There's a legal opinion from a law firm saying that these shares are legit. It's a standard thing for these types of deals. The company also put out a press release on May 30, 2025, announcing the deal and the price of the shares, and another press release on June 2, 2025, saying that the offering had closed, so the deal is done. Finally, there's a warning about forward-looking statements. This is just a legal disclaimer saying that anything the company says about the future might not actually happen. It's a way to protect themselves from lawsuits if things don't go as planned. The report mentions that the intended use of the funds is to be used for working capital, general corporate purposes, and to repay a portion of the company's debt. Looking at the report's exhibits, one is an opinion from the Disclosure Law Group, which goes over all of the registrations of the offering. It states that this is exempt from registration under the Securities Act of 1933. Okay, let's zoom out and look at the bigger picture. Super League Enterprise is raising money by selling a bunch of shares at a very low price. They're using the money for working capital, general expenses, and to pay down debt. On one hand, raising money can help a company grow and invest in new things. But on the other hand, selling shares at a low price dilutes the value of existing shares, meaning each share is now worth less because there are more shares overall. It's like cutting a pizza into more slices. Each slice becomes smaller. It also means that the company needed the money badly enough to sell those shares. Otherwise, why not sell them at a higher price later? This might be a sign that they're struggling financially. The fact that they're using some of the money to pay down debt is also concerning. It suggests that they might be having trouble meeting their financial obligations. However, the company may have big plans with this money. Maybe they will use the money to acquire a big company or make a big investment in something that would grow their company. But from what we see, there's no information on this. Super League Enterprise is at a crossroads. They need to show investors that they can use this money wisely and turn things around. Otherwise, this could be a sign of more trouble to come. Alright, that's our breakdown of Super League Enterprise's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.